I think perhaps it's a very small one. I think there are probably other issues.
Attack, shall we say?
I think there's an element of just people wanted too much money for the IPO.
Thank you.
And at the end of the day, if you look at this company, we were very interested in it. It's a well-run business. It has decent growth, particularly in the China operations. It had some opportunities for M&A in the region to go out and make some acquisitions. It was looking very interesting, and there aren't a number of really good, stable staples businesses in Asia. So for us, it was quite an interesting opportunity. But we just looked at the price and said, you know what, this is just too much for us. And much as we'd like to do it, we'll wait until the IPO happens, see the price settle back, and then come back to it.
I love
and
agreeing
everyone
with you.
said the same thing, and then they couldn't get it away at a price.
I couldn't agree. Do you know, it's wonderful to have an affirmation from such a smart man. Good morning to you.
Good morning, Steve.
It's only an IPO on day one. This is what I'm trying to remind people who've just come to this market and think, it's an IPO, I've got to stag it, I've got to buy it and sell it on this massive move on day one. Fine, play that game. I have no problem with that. Do what you like. It's dangerous, but play it. It's volatile. But on day two, it's just another stock.
Absolutely.
It's just another stock on day two. So the greed that the financial sponsors and book runners and backers of this asked for consumer staples, I reminded everyone on this one at the time of the abandonment of the IPO that consumer staples are hitting record after record after record at the moment in the United States. They are bid only because you've got the guaranteed cash flow, you've got the guaranteed dividend, you've got the free cash flow that people can make a discounted model looking forward and work out how much money you're going to have in an era of zero interest rates as well. So it's a no-brainer that these stocks can fly if you don't price them greedily.
That's a Western approach, though, when you think about consumer staples, food and beverage, about how defensive it is. I wonder whether it was just too boring for a lot of Asian investors chasing more risk.
Of historically boring companies like Universal Robina, for example. You know, we wanted them, and then they don't grow the same way. If you can find a nice staple growing in Asia consistently, you know, noodle businesses in China, there are a lot of staples companies people want to own. Absolutely.
Even the Asian investors?
Oh yeah, they like a combination as well. And income everywhere. And a lot of global managers, such as myself, we all look at those, because if you've got a staple in still a growing area with GDP still rising at a significantly faster rate, that's a lovely combination. The only problem with staples business in the West is they don't grow very much anymore. But they're very expensive because everyone chases the yield. If you can find one that grows for someone like me, that's a very interesting opportunity at the right price.
One swallow doesn't make a summer, but I love looking at stories like this and trying to find out whether we're seeing a turning point. And what was interesting also to me about this story is that after years of bulking up and buying up rivals, this is a divestiture, and it recognizes, or the company has recognized, that it needs to pay down debt.
Well,
now that, to me, suggests that, I mean, it may just be a single issue with this company, but that CFOs are beginning to take note of their debt, and maybe we get a switch away from a market where we've only seen corporates engage in buybacks fueled through issuing more paper. Are we at a turning point here, Mark?
I think there are.
Can we link this back to the Fed and the nervousness about interest rates and growth?
There's no doubt investors, I think, do get nervous when your debt levels get to an area where you're beginning to think about, you know, what does that impact the company? As long as it's growing, it wasn't so much of a problem. But with ABI now, they're so big, and with their core market, particularly in the US, being pretty flat from a beer perspective, then investors are starting to say, well, what's the long term here? If they're not growing very much, then maybe they should start to pay down debt. But if you looked at the Asia IPO, one of the things that people hoped is once that was done, that company then had the ability to go out and make acquisitions again, which could be more meaningful on the smaller Asian business, rather than ABI is so big now. There's almost nothing they can buy that's going to move the needle. But if they break it up into chunks, they can do a bit more with it.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.